Good morning, everybody. Happy Monday. It is President's Day here in the United States. El Presidente. So we have a holiday, so a short trading day for stocks, but the market is up again. Very interesting. I am working on MMT Trader. That will be out later today, as always. See, even on the holidays, I'm working for you. I'm working for you. All right, couple of things to talk about here. Number one, I don't like to use hyperbolic language. I talk about language all the time as a very important part of a mental game, right? We're never supposed to use overly dramatic language because it's never as bad as it looks. It's never as good as it looks. It's part of your mental training to kind of program your mind to stay even keel. Having said that, however, the stock market to me does look a little bubbly, particularly given the recent developments, and those developments being the holdup in the IRS tax refunds. I've been talking about that now, and I mentioned several times what is the reason behind that. The reason behind that is a law that Congress enacted in 2015, which went into effect this year, which required the IRS to hold some tax refunds longer than they normally do. This is designed to prevent tax fraud and identity fraud. However, it's my understanding that February 15th was the date. That was last week, of course, when they were allowed to start letting those tax refunds, be paid out. Now, we have seen a big divergence between where we were last year, in other words, February 2016, in terms of the total amount of tax refunds sent out, and where we are this year. So, whereas the fiscal flows were very positive up until last week, we were running about 32 billion ahead of the prior year, we are now 35 billion below. Okay, that's a big chunk. That is a big chunk. And while I fully expect the tax refunds this year to catch up to where they should be, as they get sent out on a more expedited basis, that amount, that 35 billion that the economy basically depends on at this time of year, households depend on it, individuals depend on it, firms depend on that money being spent that flows to their revenues and their income. To me, that's got to make an impact, okay? Now, we see it in all the charts very, very clearly. It looks like spending fell off a cliff. And again, we know the reason behind this, and it will likely be corrected. Nonetheless, it's got to put a pinch. It has to put a pinch, at least the way I see it. Stocks continue to rise basically on air at this point, on expectation, on excitement, on the Trump tax proposals, of which we really don't know concretely what they are yet, as of yet. And, I've been all over this. I went through the, point by point of the so-called sketchy details that we got so far on the fiscal plan. And I don't know. There's a lot of things that I see which make me skeptical about it. But nonetheless, we are where we are with regard to stocks. If you look at, once again, open interest, which came out on Friday, asset managers, 600,000 net long. That's longs minus shorts, S&P E-mini futures contracts. So that has been a relentless accumulation now since the beginning. I would say probably since mid-November, a relentless accumulation of a long position in stock index futures. And I would point out once again that these guys, they were practically flat at the beginning of 2016 when I was saying buy. They really didn't have a big commitment until after the election. Okay, now it's been a great rally, and largely because of their buying. But if you look at their historical performance, and if you look at how they were positioned over the last, year, I have to say they weren't that savvy. So again, you're casting your lot. It's not to say it can't continue, but you're casting your lot with a group of market participants that don't have a spectacular track record. That's all I want to say. The other thing that's pretty interesting here, and again, all the numbers will be broken down in the MMT Trader Report, is the oil situation. We have oil up, crude oil up today. Record inventories in gasoline, just shy of record inventories in distillates, which we hit, the week before. Falling exports, falling imports, falling refiner inputs, falling gasoline demand, and a record open interest long position for speculators in the oil markets. I mean, I don't see, you add all that up, and that looks like a powder keg ready to explode on the downside. Now, I could be wrong about this. Maybe there's going to be more long accumulation of oil. On what basis? I really don't know. Maybe some people have inside information that OPEC is going to do some major cuts, or Iran's going to block the Strait of Hormuz. I have no idea. But, I have to trade on form, on what I have used in the past, right? This is the trust factor in terms of what I use to successfully trade. I look at that and it looks very, very questionable to me. Not that the rally over time can't go higher, but some kind of a shakeout of that long position seems likely. Anyway, a lot more stuff coming in the report. As always, if you want to get the report today, plus all the back issues, I say this all the time, go to pitbulleconomics.com. Right there on the home page, it says get the 30-day free trial. You click on that, get the 30-day free trial, you get the report later. In the meantime, you could download all the back issues. That's it for now. See you guys later. Have a great day. Bye-bye.